Hijos.
Hello, hello. Hi, Iris.
¿Cómo están todos, chicos? Feliz lunes.
Lunes.
After Hours Real Estate, después de las 5, ya todos terminamos. Bueno, nosotros nunca terminamos de trabajar. Ya ven, ¿verdad? Tenemos un horario así corrido, pero la mayoría de nuestros amigos ya terminaron a las 5. Ya es como que, digo, happy hour en Monday, en lunes, pues no. Pero bueno, todo se puede, ¿no? Todo se vale. ¿Cómo estás, Ana?
Muy bien, tú, Iris, ¿cómo estás?
Muy bien, gracias a Dios. Para
Gracias.
nuestros amigos que se estén conectando ahorita, estamos en After Hours Real Estate. Ok, el día de hoy el tema va a ser cuáles son las 5 preguntas más importantes que le deberías de hacer a tu oficial de préstamos. Ok, básicamente son las preguntas que la mayoría de compradores nos hacen, ¿verdad? Usualmente es algo repetitivo, ¿no? Todos tenemos la misma pregunta. Y tenemos a Ana Cabrales con Cabrales Mortgage aquí presente. Gracias por estar aquí, Anita.
Gracias,
Me
Iris.
encantan las plantitas. ¿Ya vieron las plantitas que están atrás de Ana? Le estaba comentando, me tienes que pasar muchos tips, me la paso matando mis plantas.
Y cuando quieran tips ahí en la oficina también me preguntan, Ana, ¿esta plantita qué le hago? Y ya les digo, ponla más en sol, o échale
Sí,
menos agua, o échale agua, o fertilízala.
nunca sabes, o sea, ay no, bueno, ya hablamos de ese tema, los próximos tips van a ser
Sí.
cómo mantener tus plantas.
Ahora que tienes tu casa, ¿cómo la decoras?
Ok, ¿cómo mantener las plantas? Ok, amigos, entonces estamos en After Hours Real Estate, voy a poner aquí el tema de hoy es, what are the top 5 questions to ask your lender? Okay.
And take it easy on me.
I know. Ana, vas a estar en el panel.
A ver, a ver, a ver.
Preguntas van a ser para ti. Okay. What are the top 5 questions to ask your lender? Okay. Obviously, when you're buying a house. So, number 1. No sé qué prefieran, inglés o español, ustedes me dicen. Como quieras, Ana. ¿Qué prefieres?
Como quieras.
Ah,
Echamos de los dos.
¿lo hacemos de los dos o lo hacemos en inglés, ya que la vez
¿Está
pasada lo hicimos en
bien?
español? Okay.
Okay.
Today is going to be what are the top 5 questions you need to ask your lender, okay? Which are the most important ones. We usually, as realtors, I mean, we talk to the buyer first, okay? We sense the buyer, and then the buyer asks us certain questions that are usually the same questions, okay? But we always say, let me, contact you with an expert on lending. Okay, in this case, we have our expert in lending. Okay, Ana Cabrales is here. So, Ana, I'm going to ask you the first question. Okay? So, the first question, it always has to do with interest rates, right? Everybody's asking about the interest rates right now. So, what will be, when can they lock their interest rate? So, let's say they talk to you, they're pre approved, they're looking for houses. When is the right moment to say, hey, I want you to lock the interest rate?
Okay.
Mm-hmm.
So most of the time we lock the interest rate after a person is under contract. Basically, they have a contract to purchase a specific house and it's signed by the buyer and by the seller. When we get the contract, we usually look at the closing date, the estimated closing day in the contract, so that we can make sure that it's within 30, 45 days. If it's maybe new construction, it's going to take a few months. Maybe for those, we wait a little bit longer. So we usually look at that. The interest rates can be locked for 15, 30, 45, 60 days. Most of the interest rates that I usually lock them for 45 days. So basically, it gives us 45 days to close. Even though we can close in 20 days, 30 days, I give it enough time so that the customer doesn't have to pay extra fees, because if the interest rate expires, we have to extend it and then it costs money.
Okay.
Now, we also have a program where we can actually lock the interest rate up to a year. Let's say that you're building a house and it's going to take 7 months to build it. We can lock the interest rate upfront for a year, and you have the option to float down the rate. So let's say that the interest rates come down during that time, we can negotiate for you. If a lot of customers ask me, okay, what am I pre-approved for? I tell them, you're pre-approved for this much. Here's your pre-approval letter. Go shopping for a house. But then we cannot lock the rate at that time, because we just don't know how long you're gonna take to find a house. Are you gonna find a house in 2 days? Some customers take 3-4 months to find a house. So
Yeah.
When you find a house, the interest rate that we log may be very different from the interest rate when you got pre-approved. What I can tell you is that I never lock a rate without discussing it with my buyer. I always contact my buyer and I say, these are the interest rates today. This is what the monthly payment would be associated with that rate. This is how much money you would need, so that the customer can compare and see what's best option for them.
Now, let me ask you, Anna, because I have my buyers when we're looking for a home. Let's say we find a house, right? But the first question they ask me is, can I lock the interest rate now? Or they will say something like, I need to hurry up because my interest rate is going to go up. So that means that those 45 days, which are the common ones, right? The 45 days, are those already passed because you're counting those 45 days from the moment that you give them the pre-approval letter?
No, from when we get the contract.
From where you get the
From
contract.
when we get the contract, yes. The only thing is we follow we follow like a forecaster of interest rate. They follow the stock market, the mortgage bank securities. And so basically this person tells us this is what's happening in the news, this is what's happening with mortgage industry, and this is what we expect. We expect interest rates to go up, we expect interest rates to go down. So we can kind of know what's gonna happen, and we advise the customers. We tell them, I think today's a really good day to lock, let's lock it. Or you know what, today is bad, why don't we wait till tomorrow? We can still keep working on the file, but we haven't logged it. So we
Okay,
give them some advice. Uh-huh.
yes, and that's why they're telling me we need to hurry up, we need to find a home, because a lot of them have told me, right? I mean, I'm ready. I need to, by when can you have the contract? By when can we lock this? I don't want my rate to go up. But I was thinking it's already been 45 days. I wasn't too sure. I
Yeah.
mean,
It's just that the expectations are that they're gonna go up, so they want to do it before that happens.
okay, that's awesome. So then that is one of the questions for our viewers right now. We're talking about the top 5 questions to ask your lender. And one of the questions that they ask us all the time is, when am I supposed to lock my interest rate? Okay, so that's what Anna is telling us right now. You have 45 days from the time that you got a contract. What does that mean? The contract was accepted by both parties, seller and buyer, and it's already in escrow, which means with title company. So that's when you have a contract. A contract does not mean that I presented an offer, right? And I'm waiting for an answer. No, you still don't have a contract. That's an offer. Okay, just for you not to be confused with that.
Yeah.
Okay, Anita. So thank you so much about the interest rate. I mean, I'm learning too. Because sometimes we don't know what to tell them, right? I mean, I always say, well, I'm not an expert in lending. I'm an
Yes.
expert in negotiating, right? So then you can talk to Anna about those things. Okay, so then number 2. Okay, what is the best loan program, okay, for our buyers, let's say in this market? You
Okay.
can talk in this market and maybe in general, right? But I mean, I will say in this market that has shifted, what will be the best loan program for our buyers?
Okay. So the loan programs just in general are usually FHA, conventional, veteran, USDA, maybe down payment assistance. And
Mhm.
then within those programs, we have years. You get a 15-year loan, a 20-year loan, 25, or a 30. So there's a lot of options that you can have. How do we decide which one is best for the buyer? One would be making sure that they qualify. I want to make sure first that they qualify for one or two of them. And once I know that they qualify, let's say for conventional and FHA, and let's say that they want to do 30 years, then at that point I tell the customer, okay, on the conventional you would have pay this interest rate, this would be your payment. On the FHA you would pay this, and it's basically case by case. If a customer has more money that they can give down, maybe a better credit score, we go conventional. Or if the house dictates that it has to be conventional, then we go conventional. If
Okay.
the customer has iffy credit, a lot of derogatory items on the credit report,
Mm,
it's gonna be hard to sometimes get it conventional. So we have to go FHA. So I'm gonna try everything that I can on FHA.
okay.
Sometimes when I have a very difficult file that I cannot get approval on 30 year, when I try 15 years or 20 years, I get approval. it,
Okay.
it means that the buyer is going to pay more monthly because it's a shorter time, but that's the only way to get approval sometimes. So then I discuss it with the buyer. You know what? I'm not getting approval for 30, but I'm getting approval for 15 years. Your payment is this. Can we look at your budget? Is there anything you can cut weekly, monthly, so that you still can pay the house and be comfortable and not house poor? So that's some of the things that I talk to the customers. I also talk to the customers about the plans with the house. How long do you think you're gonna live in that house? How long do you think before you liquidate it? A lot of customers tell me, I'm expecting to sell a property in Mexico. I'm gonna get a big chunk of money. I plan to pay it in a year and a half. Okay, so then that gives me some idea of what type of program to put them. Really, the interest rate doesn't matter at that point because they're going to liquidate it quickly. So
Mm.
maybe we put conventional, that way they don't pay mortgage insurance upfront, which is a big lump sum money.
So, in other words, you will assess them,
Yes,
okay, according to what it is like the best loan program for them, according to their financial situation
correct.
or
Yes,
their future plans with the property.
yes, correct.
Okay, okay. So then, let's say, would this be correct to say that if you have a little more of down payment and an okay credit, then more than likely the best loan will be a conventional?
Yes, it also has to do also with their debt, how much debt they have, because conventional, the debt to income is a lot lower. So I also need to make sure that their debt meets. But if they have better credit, a larger down payment, I'm gonna try conventional because of the mortgage insurance. It's gonna be cheaper in the long run, especially they plan to keep the house for a while. I'm gonna try that route. If they're married, Texas Community Property State, I know we've spoken about this in the past. If
Mhm.
they're married and one of the spouses has a lot of debt and I don't want to see that debt, then we'll go conventional. That way we only focus on the party that's getting the house. So there's different things, but for sure it's a lot of talking with the customer to see what their plans are and discussing the differences on their scenario and then giving them the options, and then ultimately the customer chooses. We tell them what we suggest, but it ultimately is their decision.
Okay, so then it will be definitely your decision. I mean, what we've seen in the market lately is usually the majority of the pre-approval letters that we get, they're conventionals. The majority of them. We still have the FHAs, but I've noticed that the market shifted more into conventional because of the seller's market that we used to have, a couple of months back when we were competing for, different offers. So you had an advantage with the conventional. But I've still noticed that they're still using conventionals more often than FHA,
Mhm.
right? So then, in other words, for you friends that are listening to us, it all depends on your financial situation. It doesn't mean that FHA is better than conventional or conventional is better than VA loan. It just means which is the one that is the right loan for you under your circumstances. That's what it means,
Yeah.
basically. And then an expert in lending will give you all of the details of the pros and the cons, and then ultimately you make the decision. The decision is always yours.
Yes.
Okay, just for you to know about the credit. And remember, guys, or friends, we are live right now. So then if you have a specific question, right, that we are not talking about right here, that it has to do with lending or it has to do with real estate, anything real estate, you can always ask that question now or send us a message and we discuss those questions in our next after hours real estate next Monday. Okay. Okay, so then Anna's doing great, right, friends? I mean, she's doing wonderful. Yay!
Two out of five. 2 out of 5.
Oh, we're making her like basically go through all of the all of the context, right? I mean, for your your mortgage lending test.
Yes.
Okay, so but she's so good that she remembers. Okay, question number 3. Okay, what is included in my estimate? So I'm a buyer, right? You're gonna give me an estimate. I want to buy a home, right? So what is included in the estimate that you're gonna give me?
Okay.
Because we always
So
get the question.
so first of all, I hear a lot of buyers that never get an estimate.
Oh,
They
yeah.
tell me they don't. They told me I was pre-approved. I'm like, okay, what payment they give you? How much money do you need? They didn't tell me. And it's
Ah,
like, how do you know, right? How do you know what you're gonna pay, or if you're prepared, or if it makes sense to you? So first of all, get an estimate.
Mm-hmm.
A good loan officer doesn't have anything to hide, so they're going to give you an estimate that gives you all the breakdown of what you're paying. Typically, the estimate will have how much you're buying the house for or getting pre-approved for, the monthly payment, which is an estimate at that time, especially if you don't have a house picked out, because taxes and insurance are usually an estimate at that point. If you're under contract, then they'll be more exact. You'll have the down payment, the closing costs, and the prepaid items, which are taxes and insurance that you pay upfront. So the estimate will have down payment, closing costs, prepaid items, which are taxes and insurance that you pay.
Mm-hmm.
And if you're buying the interest rate, you'll have discount points. Those are if you're choosing to get a lower interest rate, that those fees will be in your interest rate, in your estimate. Usually the estimate will have all the fees associated with your loan, our fees, third party fees, title company, survey, appraisal, the courthouse recording fees to check if it's in a flood area. Usually all that's included. Usually the only fee that's not included in estimate, at least my estimates, are a house inspection. We don't require a house inspection, except for VA, we require a termite. But for all other loans, it's not included. So then you would pay that directly to the inspector. It won't be on our numbers.
And
Uh,
can you repeat what the prepaid items are? I have down payment, closing costs, discount points, and the prepaid items. What were those?
or taxes and insurance that you pay up front. You always start with like a little savings in your mortgage, which is an escrow account. So basically, we collect tax and insurance up front, so we can start with a little cushion on that savings.
Mm-hmm.
If your house is in a homeowner association, I usually like to know that information. How much is the transfer fee? What are the dues? So that when I give you an estimate, I also include that. I rather my estimate be a little bit higher than what the actual will be, because I just want the customers to be prepared, and at the end they're happy because they estimate came up to be lower than what I had given them.
Mm-hmm.
But a good estimate will have everything included, nothing that it's not, nothing that's a surprise that, oh, that wasn't disclosed. If the I always check the house, the land. If it's acreage, the survey is usually expensive. So I check that. If it's in acreage, I usually increase my survey so that the estimate it's more accurate. I check if it's in a flood area. If it's in a flood area, I include that insurance so that my estimate is more accurate. So typically, if you get an estimate from me, it would include everything, no hidden,
No
you
hidden. Mm-hmm.
nothing that you have to worry about in the future except for the house inspection. I don't include that because one, I don't know if you're gonna get it, and two, if you decide to get it, you usually pay the inspector direct.
Correctly. Now, I mean, this is a very good question because once, I mean, some people, I mean, you're great because you disclose all of that information, but sometimes we have some people that will say, I don't have that amount right now, so I'm going to stop looking for a house because I am not ready. Right. Then we try to explain to the buyers, you don't have to have the money at this moment, right? Today to begin the purchasing of a property, but you have to have a plan to have it ready once you get a contract. For example, within 30 to 45 days, right? And probably you're not going to need the whole amount because you've been paying some items during the process. For example, the survey, the appraisal, that it goes, through the closing process.
Yeah.
So that is something also important. That way you don't, that way my buyers will not get discouraged because sometimes they will say, I'm going to stop right now because I don't have whatever amount it is, right?
Yeah.
We try to explain, no, you have time.
I have a customer right now, exactly that he's looking into buying a little condo, and he sent me the bank statements, and that he doesn't have sufficient money. So I said everything looks good, but what are the plans with the cash that you need? That we went over, and he's like, okay, I'm getting paid this Friday, this amount. Out of that, I'm gonna save this much. Then next Friday, my wife gets paid. We're gonna save that much, and then within those two, we'll have enough. So we have a plan.
Have a plan, exactly. But at the same time, they know what they're going to. It's not like it's gonna be a surprise. Oh my God, no one told me I needed $6,000 and I'm
Yeah.
not ready now.
Correct.
Okay, and that is the whole point, friends, for you to know what is your estimate and what are they. I mean, and they're disclosing everything that you need to have. So it's not to scare you, it's just to prepare you to
Yeah.
have a plan.
Yeah.
So
Correct.
who is that? Is that Chibu?
That's my dog. I think somebody's at the door, so he's
Okay, okay. So then, if you have any questions about what are the prepaid items and down payment, what is does the estimate include? Let us know, okay? So we're gonna go to the next question. The next question is number 4. Um, Usually, my clients will always ask me if I buy a house of $300,000 to $150,000, how much will my monthly payment be? Right? They always ask us that question. So then what would be an easy way, right, for us realtors, brokers to explain this to a client? What would you say, Anna?
So usually when a customer asks me what would my payment be, I usually tell them like what dollar amount are you looking.
Mhm.
I have an app that my customers download, and the app has a mortgage payment calculator. So
Okay.
I teach them how to use it. So I tell them, okay, put 250. What down payment are you giving? 3.5%. Okay, what interest rate more or less did I quote you at? And
Mhm.
then what do you think? Okay, if it's a house of 250, you're gonna get insurance, let's say $100. Okay,
Mhm.
what are property taxes? I show them how to look for property taxes specific on a house on the Hidalgo County website if it's here locally. So I show them how to do it. And then, or maybe they already know what the taxes are, they can enter it. They press calculate, and the calculate later gives them a monthly payment. And then if a customer tells me, "Hey Anna, we're thinking of offering 10,000 more or 10,000 less," I usually tell them, "Don't worry about 10,000 here and there, because it's really gonna be negligible on your payment. Maybe $30, maybe $40 a month extra, which is a dinner right now. Nothing. You can buy anything for $40." So
I
I'm
know.
like, "Don't worry a lot with little changes like that. Just concentrate on the main payment that I gave you, and then we just adjusted a little bit."
That
What?
is a very good point, Anna, because we have clients that cannot decide because the house is, I don't know, 220, they qualify for 225 and the house is 235. And then everything stops because they think I cannot afford it, right? And it's only a difference of $10,000. So you're listening out there, my friends. If the difference in the price is $10,000, the increase in your monthly payment is gonna be very small. It's not gonna affect you. So then my advice to you is make the decision on the house that is a little bit higher, because the only thing is gonna affect your monthly payment probably $30 to $50, which is probably not buying a Starbucks coffee 3 times in a week.
Yeah. Yeah.
More or less. So then go for the house that you want.
Yeah.
Don't make the $10,000 to stop you, right?
Yeah.
Go on.
And then from one house to another one, the only thing that affects, let's say you're looking at two houses that are 250 each, the only thing the difference will be the insurance. How insurable is the house? That would an insurance company give me an insurance? What affects insurance will be trees that are very close to the house. Sometimes they need to be trimmed, or insurance will cancel. Swimming pools, usually trampolines are bad for insurance. Flat roofs sometimes are bad for insurance. But if the house has been remodeled and stuff, you will get cheap insurance, and we can help you get quotes. The property taxes also affect the payment. If the house is on the outskirts, usually typically taxes are cheaper than in the city. So those are things that we can look specifically, that like we can go in general. Okay, what would my payment be at 250? And then we can look at two houses that are 250 more specifically, because we're going to look into each of them
Into
individually.
detail.
Yeah.
That way you can tell them exactly what would it be, if it's gonna be $30, $40, $50, whatever
Yeah.
it is.
Mhm.
Well, then that was easy. So then the first answer for what is my monthly payment is we have an app, or your lender will, not all of them, but I mean, especially Anna will give you either a figure, right? Or will allow you to use this application. That way you can figure it out what your monthly payment is. But I guess the golden nugget here is that if you're buying a home and it's $10,000 difference, you can add $30 to $50 more into your monthly payment. So then I think that is very important, because people don't make a decision, I mean, based on the $10,000, because
Yeah.
they feel $10,000, right? I mean, but remember, it's a monthly payment.
Because it's divided over 30
30
years.
years. That was
Yeah.
it. So then you can do it. Okay,
Yeah.
buy the house that you want. Thank you, Anna, about the monthly payment. If you have any questions, let us know. Okay, number 5. Okay, so number 5 is, how much money do I have to make to qualify? I mean, a lot of my clients, when we're discussing, right? I mean, can I buy a house, or they call for information on a house? The first thing they will tell me is, I don't know, I make this amount of money a year. Do you think I can buy a $300,000 home? I
Yeah.
mean, no, because I can't, right? I can't tell you. Maybe you need to talk to an expert. So basically, what we tell you is, it depends on your credit, it depends on your finances, it depends on your debt, right? But we will recommend you to talk to a lender, right? So then, Anna, what can you tell us about our buyers, right? How, I mean, for them to be educated, for them to know how this works, I mean, how can they determine how much money they need to make in order to qualify for a house?
That's a very, very common question that I get all the time. People
Yeah.
tell me, I want a $250,000 house. How much do I need to make? And it's like, I can have two people that make the same amount of money and qualify for different prices. Why? Because of their debt.
Exactly.
So usually what I say is, just roughly add all your monthly debts, only the stuff on credit,
Mhm.
vehicles, installment loans, student loans, child support. If you have properties, if the property is already paid, you take the monthly payment on the insurance and the taxes, because you'll never finish paying taxes. So
Mhm.
you add up all your expenses. So let's say that your monthly expenses on credit cards, don't people tell me I owe 10,000 on the credit card.
Mhm.
I don't care about how much you owe. I care about the minimum monthly payment. So
Okay.
let's say that you on when you add up the vehicles, the child support, the student loan, and the credit card minimum monthly payment, it adds up to $3,000 monthly.
So then, a ver, Anna, let me see. So then, if they add the minimum monthly payments, that will determine how
So
much
that's one step.
they determine their debt, right? You're
That
determining
determine
debt.
just the debt. Uh-huh.
Okay.
So then let's say that they want a house that when we calculated the monthly payment, let's say that the monthly payment is 2,000. So their monthly debts are 3,000, and
Mhm.
let's say that the house payment is 2,000. So that's 5,000 that they're gonna have in debt after they buy this house.
Mhm.
Typically, their income has to be over more than double of that amount. So that
Mhm.
means their monthly income in this case has to be more than 10,000 to qualify.
Mhm.
Typically, like that's just a rough estimate of how to kind of calculate what income they have.
Okay, so more than double to qualify. So then, if your debt is 3,000, friends, listen. Only the minimum monthly payments that you make, for example, in your car and your credit card, I don't know, in your house. Okay, so then if you owe $3,000 and the monthly payment on the house, let's say, is still the 10%, Anna. Like if the house is $200,000, can we say your monthly
Yeah,
payment is 2,000?
that'll be a safe estimate. Yeah, maybe
Estimate.
it's a little bit less, but yeah.
Something less. Okay, so then if the house is 200,000, there will be 2,000 monthly payments. So now you owe, or you will have to pay $5,000 monthly. So how much money do you have to make in order to qualify for the $200,000 home? It will be double the 5,000. So
Yes,
in this case, you have to make what, 10,000 a month?
yes. So you know that if you make 6,000, then it's not gonna work for that house. So
No.
it's a rough estimate. Then if let's say that you tell me, oh, you know what, I make 11,000, then it's looking promising. So it's like, okay, well, let's look at everything. Let's run credit. Let's check your pay stubs. Let's make sure you have your income. But there's a lot of customers that they're like, I'm not ready to run credit, but can you tell me more or less what I'll qualify? Okay, what is your income, what are your debts, and then I can roughly tell them how much they're gonna qualify. We are able to exclude some debt, so sometimes I ask the customers, how much do you owe on the credit card? Let's say a credit card has a $300 payment. How much do you owe? Oh, I only owe 1,200. Well, that can be paid off, and we don't have to count the 300.
Exactly.
Or vehicles, sometimes when you have less than 10 payments, we don't have to count it sometimes. So it's like, okay, the vehicle is almost gonna be paid. Let's not count that one. So we can start looking at as to maybe there's some debts that can be paid off so that the income doesn't have to be that much.
Okay, well, these all of these are golden nuggets. I mean, we're always adding value to our clients. I mean, which they convert themselves into our friends
Mhm.
once we end up a transaction. I mean, if you're listening to us through any of these platforms, Facebook, LinkedIn, what else, YouTube, all of those, please let us know you have any specific questions. How can we add value the way you can, basically educate you the way you can make a decision whenever you're ready? Let us know. We're here live every Monday at 5-ish. Today I was late. Okay, so then at 5 some, right after work, we're gonna be here. So let us know if there's any other things that you might discuss, any other topics of interest. Let us know. We're here always to help you. And Anna, thank you so much
Thank
for
you, Iris.
all of this awesome information. I know this is going to help someone out there that was listening to this. And if they were not listening now, I know they're going to see it later. And that is the whole point, to serve you, to help you. So let us know if you need anything. And thank you, Anna. Love
Thank
seeing
you,
you.
Iris.
Bye, friends.
Bye.
Bye.
Talk to you soon.
Talk to you soon.